Mortgage rates giving the housing market a bit of whiplash this year, to put it mildly. After trending lower for 6 weeks, they're back on the rise. According to Bankrate, the average 30-year fixed mortgage rate rose 12 basis points to 6.59% this week. And just this time last year, mortgage rates were only 3.24%. So after all the housing data we got this week showing mortgage applications and home prices falling, what does this mean for the real estate market in the new year with more rate hikes on the table at the Federal Reserve? Joining me now in a Fox Business exclusive is the Nest Seekers International Chief Economist, Erin Sykes. Erin, so good to have you with me. I'm particularly excited to talk to you as I think about buying my first home. So these are always exciting things for me to talk about. I want to get your perspective. We saw the Case-Shiller index come out earlier this week. Prices didn't slow as much as expected, but then we also had pending home sales reach their lowest level on record, excluding the pandemic, dropping 4% in November. Are we seeing a stalemate in the market here?
A little bit. You know, we have sellers that still want 2021 peak of the market prices, and then we have buyers that want a discount. And I think the key is there's negotiability, and it's no surprise, and it's no news story that rates have increased by double this year. But what I think is left out of that conversation is that they're actually still over a full point below historic averages. So even at 6.5%, our historic 50-year average is a 7.77% 30-year mortgage rate. So things are not that bad. I know we tend to talk in extremes, but there's a lot of buying opportunities, and don't forget to negotiate. I think the problem is that sellers buyers, they're in this take it or leave it, whatever the posted price is, that's what I've got to pay, because that's what we saw over the last 2 years. But that's not it. Take a bite, go to the showing, and negotiate. We're back to, normal times.
Well, I love that you brought up the context on that mortgage rate, because I know if I've lamented how high mortgage rates are, my parents have said to me, well, our first mortgage was 16%, 17%, right? And so this looks low in comparison to something like that. But we are expecting the Fed to hike rates at the end of January and likely beyond that, even though the pace of those hikes have slowed. So what might you expect mortgage rates to hit come this next year?
So I think we actually saw the peak of mortgage rates around 7.25% a couple months ago. We've pulled back a full percentage point since then, and there's a lot of inputs into mortgage rates beyond the Fed funds rate, and it has to do with personal credit, it has to do with employment rates, and where you're buying. There's a lot of regionality in terms of mortgage rates and also in terms of prices. So you have to take that into consideration and, look at the buying opportunities. Only dead fish go with the flow. So if you want to make money, if you want to make a good investment, sometimes you need to be a little bit contrarian. We've already priced so much into the market because we have been talking negatively for the last few months, but that is a blaring red sign for opportunity.
Well, and you talk about opportunity. Certainly the numbers that we're talking about, these are national averages when it comes to how much prices are coming down, but it varies region by region. So what are some of, the gems that you're seeing if folks are willing to move when they're thinking about buying?
Yeah, so one of the interesting things is that LA has pretty much been the most stable in terms of inventory and prices. We're seeing year over year pretty much flat in LA. We have Miami, which is still a very hot market, might be affected by the crypto fallout. We have to see about that. But it more or less moves on the socioeconomics of Latin America. And because there is so much disruption in South America, we see a lot more money flowing into Miami. Palm Beach, if you take out our giant record sales, above $100 million in Palm Beach, our prices have held flat. Inventory is starting to tick up, so you have more options. The Hamptons, still very strong market, more inventory, and it's also off season, so now is the time to shop. And then New York. I mean, who wants to pay an average rent of $6,000 a month to live in Manhattan? It's time to buy. Home ownership is the #1 biggest wealth builder in America.
Sure.
So take this opportunity and grab it if you're in one of these opportune markets.
Well, and to add context to that 6,000, it's like, what are you going to get in Manhattan for that? It's going to be a postage stamp potentially. Yeah, exactly. Thank you so much, Erin, for your insights. Really appreciate it. Happy holidays.
Merry Christmas.
Okay, so